Southeast Asian central banks look like they're close to done fighting inflation using interest rates, Bloomberg reports, with economists seeing the tightening cycle ending after 25 to 50 basis points of moves in the coming months. According to median forecasts in a Bloomberg survey, policymakers in Indonesia, Philippines and Thailand will each raise borrowing costs by a total half point in the coming months before reaching their peak rates. Malaysia, meanwhile, will cap the rate hike cycle with one more quarter point increase. The report noted that Malaysia was the first to raise its benchmark rate in this tightening cycle last May, although the Philippines was one of the most aggressive. Bank Negara Malaysia has raised the key rate by a cumulative 100 basis points since to tame inflation. While the bank expects economic growth in 2022 to exceed the government's 6.5% to 7% projection, it sees expansion slowing to between 4% and 5% this year. Quoting Alex Holmes, an economist at Oxford Economics, the report said, following a final rate hike this month, Malaysia's slowing growth and easing inflation should see an extended pause from Bank Negara for the rest of 2023. The central bank will decide on the key rate next Thursday. The government will be reviewing the ceiling price of standard chicken, which currently stands at RM9.40 per kilogram. A Bernama report, citing Domestic Trade and Cost of Living Minister Datuk Sri Salahuddin Ayub, said with the recovery of chicken supply in the market, he will hold discussions with industry players to determine the new ceiling price soon. He noted there are companies across the country that are selling poultry below the ceiling price. Asked whether the new ceiling price will be lower than the current price cap or vice versa, Salahuddin said the matter will be determined later and hopes that negotiations can be done with industry players. He said he hopes to identify the cause of the supply woes and find a solution after holding talks with chicken suppliers and sellers as well as the main players in the poultry industry. FGV Holdings CEO Datuk Nazrul Mansor says he's hoping the US Customs and Border Protection or CBP will lift its ban on the group's palm oil products and 2023. The group aims to submit a petition to the CBP by the first quarter of this year. It has been more than 2 years since the ban was announced on FGV's products on September 30th, 2020. It was preceded by a year-long investigation that reportedly found evidence of forced labour at the plantation giant. Meanwhile, FGV CFO Datuk Muhammad Hairul Abdul Hamid said the group is targeting capex of over 1 billion ringgit for FY23, which would be its largest annual capex to date. Some 400 million ringgit will be used for the replanting of old oil palm trees, while the remainder will go towards replacing some of its assets. According to Muhammad Hairul, FGV is estimated to have spent 600 million ringgit to 700 million ringgit last year. In comparison, it spent 471.65 million ringgit in 2020 and 614.75 million ringgit the previous year. FGV's share price closed unchanged at 1 ringgit 33 cent, giving the group a market value of 4.85 billion ringgit. Two top officials of rubber compound manufacturer GIIB Holdings have pleaded not guilty in the KL Sessions Court to furnishing fake documents to auditor Grant Thornton Malaysia in relation to the sale of 2.95 million ringgit worth of machinery that did not exist. CEO cum Executive Chairman Tai Boon Wee and Executive Director Wong Ping Kiong were hauled to court by the MACC to face the charges. Wong pleaded not guilty to 4 charges of giving the auditor fake documents relating to the purported sale of machinery to top-rate engineering works. The prosecution claims that the sale never happened and that money never changed hands. If found guilty, Wong could be jailed up to 20 years and fined 10,000 ringgit or 5 times the value of the bribe, whichever is higher. Tai, meanwhile, was charged with colluding with Wong. If found guilty, he could face the same punishment as her. The duo was allowed to post bail, 60,000 ringgit for Wong and 50,000 ringgit for Tai, and surrendered their passports. The judge set February 28th for the next management of the case. Serba Dinamik Holdings saw its share price jump by as much as 200% to 3 cents earlier today, on resumption of trading after a 3-week suspension. In a Bursa filing yesterday, the group said its shares would resume trading today since it had finally submitted its annual report for FY22 together with its audited consolidated financial statements for the year. It also said that trading of its shares will be suspended next Wednesday until further notice, as the court has granted a winding-up order against the company. Trading in its shares was suspended on December 23, 2022, after it missed the December 15th extended deadline to submit its annual report to Bursa Malaysia. It was initially required to issue the document on October 31, 2022, but failed to do so, citing, among others, challenges in the completion of an audit by external auditors due to a lack of personnel arising from the resignation of many employees across the organisation, including its CFO and financial controller the month prior. At the close, Serba Dinamik's shares were 100% higher at 2 cents for a market value of 74.54 million ringgit.